Great. Good morning, everyone. I'm Vivek, and I'm here to sort of launch the IVCA Private Equity India Trend Book. We've been doing this report every year for the last 7 years, and it's become the default voice of the industry in terms of the data. The whole purpose of doing this report is that it's there on the shelves of people that matter in the industry, and you can go through the data, the numbers never lie, and the inherent trends that lie therein. Rajat told me I don't have 10 minutes that were allocated to me, so I'm going to try and make this quick. So on an overall level, the entire private equity venture capital ecosystem took in about almost $50 billion this year. It's a 11% drop in terms of value from the previous year. On the face of it, it appears to be declined, but there's more in the numbers. What I want to say as of now is that there is no shortage of capital as far as deployment in India is concerned. It's more a weakness in certain sectors, like the startup sector. From a deal size point of view, we had 12% lesser large deals than we had in the previous year, and that's made a difference. The biggest weakness has been in the startup space, where the investments dropped from almost $18.5 billion to about $8 billion. As a result of this, the entire pure play private equity space saw a $10 billion decline from $40 billion to 30. From a fundraising point of view, it was a pretty good year. It was the second best year ever, but in terms of values of funds raised. But when you look at the number of funds that saw closure, this was the highest ever, right? And if you compare it to 2021, it's a significant jump, more than a double of that. The real stars were the real assets class, where you had infrastructure sector and the real estate sector clocking in close to $12 billion and $8 billion respectively, marking their all-time highs. We expect that to continue in the foreseeable future as the government as well as the private sector cranks up capex spending, and a lot of the InvITs and the REITs really allow them to rotate capital. From the pure play asset class, private equity asset class point of view, healthcare was the standout, where the amount of dollars that went into healthcare almost doubled. And then, the traditional favorites wherein financial services and technology saw almost 39–40% decline year on year in terms of dollars raised. The real star actually is the exit story, and within that, the role that the public markets have placed in terms of delivering exits for private equity investors. At an overall level, it was the second best year with almost $25 billion of exits, almost a 36% growth from 2022. 2021 was the highest ever, but that was another era when the cost of capital was very different from where it is now, and also the business risk premium was very different from where it is now. The capital markets continue to sort of play a leading role in helping private equity funds rotate capital via the IPOs as well. This year we had, in 23, the second highest number of IPOs. And I think in the foreseeable future, as the market continues to stay buoyant, we'll see a lot more of action happening on that side. From an exits class point of view, this was the first time that open markets exits really took the highest position, with almost 94% increase from the previous year. There's some data here. A lot of this data is in the report, which is going to be tabled. We have an EY kiosk outside. There's a QR code. For those who prefer the soft versions, you can download it as a PDF on your phone or your digital device. As you can see, from the highs of 21, we have progressively declined, but this decline is largely because of one asset class, which is the startup class. All other things have continued to remain the same or have grown significantly, as you can see in real estate and infrastructure. A bit more detail here, where you see the pure play PE falling down from 30 to 40. Now, all of this is because of startups. If you keep that aside, pure play PE in other segments has more or less flatlined from last year to this year, but the number of deals have fallen significantly. So adjusting for that, essentially the main insight is the deals, while the deals have reduced in count, the deal sizes have continued to go up across all segments, whether it is infrastructure, real estate, or pure play PE. I'm sorry I'm rushing this up. There's not too much time. I've been told to release whatever time I can get here. Okay, so from a deal segment point of view, there is a big drop, both in number of deals which are under 100 million and greater than 100 million. From a sectoral point of view, all the action really is in the top three sectors. As I said, infrastructure, real estate, and financial services accounted for the maximum amount of value. But if you look at number of deals, then the segmentation is very different. It's financial services, technology, and e-commerce, which have accounted for the largest volume of deal as far as the top three sectors are concerned. This is again a small slide which talks about, the growth of the pipe segment, which is the investments in private investments in public enterprises. And India that way is a gold mine for using the private equity approach to public markets, because there are so many listed players in India who are not covered, right? And the inherent strengths of the economy, the inherent strengths of the sectors that they are in provides a lot of opportunity for private equity funds to identify targets, put in the money, and then you obviously have the benefit of liquidity. From an exits point of view, again, we've covered this, so I'll quickly go through this. The main thing is that the number of exits have gone up in value as well as in volume, and the standout constituent has been the open market. Since 2021 and before, a lot of private equity investors have put in money in publicly listed enterprises. The buoyant capital markets gave a fantastic window of opportunity for them to exit. This year, you see, compared to 2022, open market exits have gone up almost double, right? From $6.6 billion to over $12.8 billion. In terms of sectoral segmentation, the volume of the exits has largely been in financial services and e-commerce. They were the top two sectors, and even from a value point of view. And this is really no surprise because of the quantum of money and the transactions that happen in these sectors. The last bit is obviously on fundraising. It's been a very good year for fundraising by India-focused funds. In terms of value, may not be as much as what it was in the previous year, but in terms of number of funds raised, it's been the highest ever. And as a number of speakers spoke about how India is becoming a larger part of the asset allocation by many Asian funds and regional funds, we hope to see Indian GPs also continue to take advantage of the opportunity that is there. And the next year, 2024, looks to be very promising, as a number of our leading Indian GPs are on the road trying to close their next fund rounds. From an outlook point of view, there are a few things we wanted to say. Look, the startup sector is obviously in a trough. We think the sector is very resilient. They will come out of it. There is a kind of a funding winter in the early stage segments. In the later stage segments of startup, it's largely a bid-ask spread issue, because of which deals are not getting done. And we think things will begin to converge sooner than later, right? And then from an exits point of view, we think the resurgence of private equity-backed IPOs is going to continue this year. We saw fintech account for a lot of investment in 2021 and 22. There has already been a scale back. We think that will continue in 2024 as well. And then there are these new sectors which are emerging because of the energy transition, talking about clean technology, talking about sustainable agriculture. This is all being driven by a huge pressure for environmental consciousness and also regulatory imperatives. And there's money to be made in these segments. We believe 2024, 2025, we'll see a lot of capital being deployed by private equity, venture capital ecosystem into these sectors. So from a yield generating assets point of view, we expect the momentum to continue. It allows for capital rotation, and then the developers can rotate that capital into greenfield deployment, which is really what the country needs. We are looking at the comeback of the private sector capex cycle. All this is going to contribute to all of that. So this is about what I had to say. I'm sorry I couldn't compress it sooner. Thank you so much. I hope you enjoy the report. Cheers.